Good morning, everybody, and welcome to the Silent Wealth Management video blog. Today is Tuesday, March 1st, and I'm excited that today's March 1st. Not only is it Super Tuesday for the election, and maybe things will shake out a little bit after that, but it's the month of March. And let me tell you something about the next 2 months in the market. All right, based on history, March 1st starts the best 2 months of stock market performance on the S&P 500 in the history of the market. Most people think it's November, December, but guess what? It's not. It's actually March and April. In fact, the 2-month return for March and April for the S&P 500 averages about 2.66. For November, December is about 2.61. So we are entering a great period in the market, and I think we've seen that a bottom is brewing here, and I think that we've seen some things come off those lows and start to trade sideways or trend a little bit higher. That's what I want to see in a market bottom. We're starting to see the energy stocks really start to bottom. Now what I'm looking for is the financials start to bottom. We really need the financials to participate because they do represent a very large part of the S&P 500, roughly 18% of the S&P 500. So you got to look at that. But let's think about this. You know, we've had a bad first 2 months of the year. Certainly, we had a little rally towards the end of February. But in February, the big major averages were mixed. The Dow was up slightly, the S&P was down slightly, but all in all, the first 2 months have been a negative, okay? So what has happened in history for March and April if the first 2 months of the year were negative? Still have gone up 2.58%. So minuscule difference. So yes, we've had a bad first 2 months, but we're going to March. Now, what does that mean? We really need to allocate our portfolios. You have to look at what you have, you have to go over it, and let's make some changes. So, that being said, you got to look at energy. All right, you got to be very careful with it, but you got to look at energy. I think energy is bottoming and ready to go higher. I think there are a lot of out there. For example, let me talk about the automakers. Automakers, I mean, Ford came out this morning with an exceptional sales number. Their sales were up over 20%. It was expected to be up 17.1% for the month of February. So that's good data. But then you look back and look at manufacturing. Our manufacturing data is showing contraction. So we're below 50, and we're, as far as their index, it's 49.4. So anything below 50 is contraction. Anything above 50 is expansion. So the manufacturing sector in the United States not doing so well. So we have to take a look at our portfolios. We have to look at healthcare. I have a feeling that healthcare is trading. You know, sometimes the pendulum, as I said, swings both ways. And I think that healthcare is trading like Hillary Clinton's going to win the election. And I think the jury's still out there. Literally, the jury will be out on her. But anyway, here's why. She is totally against biotech. She's totally against the drug companies. And I think that they're trading that way. However, you look at some stocks like J&J, who is trading near a 52-week high, which is surprising in this environment. They're all starting to get a little bit frisky here, so we got to take a look at healthcare. But what I encourage you to do is just contact us. We'll look at your portfolio. We'll help you make the necessary adjustments, and I think that you'll be very happy with the next couple of months. I think we're going to have a pretty good couple of months. I mean, so volatility is here to stay. All right, volatility, meaning big swings in the market, are here to stay. We had 23 days of 1% moves, either up or down, in the first 2 months of the year. 23 movements of 1% or better in the first 2 months of the year. That's almost half of your trading days, actually. Okay, that is the third highest in history. The last time we had something higher than that was 2009, which is right after the financial crisis. So, although it was March 2009 was the bottom of the market after the bear market. So, interesting stuff. Tonight we're having our Investing 101 class, and this is really, folks, for novice investors, for millennials, for folks that just want to kind of learn about the difference between stocks and bonds and IRAs and different things. So we're going to go over that. However, 2 weeks from today, I encourage only women. Now, I'm sorry, I'm not a sexist, but only women are allowed at my next event. 2 weeks from today, March 15th, we're doing a Women and Investing. We're limiting it to 6-ish plus or minus people in my office. We'll have some wine, we'll have some hors d'oeuvres, and we'll talk about the challenges women face in the investment field. So I'll get you that information. All you do is call our office, make a reservation, or Facebook us, okay? I'll be giving away 2 cruises on Thursday, so share my video. If you share my video, you get 2 entries. If you like our video or like our Facebook site, you will get 1 entry. So again, we're going to start today. Starts hopefully a really good day or a really good 2 months in the market. We are indicating up about 95 points on the Dow. The S&P is indicating higher as well. So we hope that you enjoy the video. Thank you very much for sharing and watching. I'm Lee Seiler. I'm the CEO of Seiler Wealth Management, and if we can help you, let us know. Have a great day.